Hello, it's Greg again. So let's really get into this and talk about why loans are denied. So we know that historically, not everyone had access to capital, and some of that continues today. But I can tell you, during my career in banking, that particularly in commercial lending, that most loans are probably denied before they get to the bank's desk. And how that happens is simply this: borrowers, in a lot of cases, are not coming to the table with accurate information, or they don't know what information they need in order to make things happen and to enhance their chances of success. So as we talk about on the website and in the video, the final four, those are the four questions you need to ask and answer before you get to the bank. Are you even ready to borrow? How much you need to borrow? How you're going to use it, and how you're going to pay the money back. So if you can answer those questions up front, your chances of success are pretty good. And there's some other reasons why loans are denied, and the common reasons are insufficient collateral, cash flow, management experience. There may be some industry dynamic, personal credit of the business owners. But I would tell you that if you can answer these four questions up front, you can mitigate a lot of situations where you are in a position where you don't know what's going on, or again, you can enhance your chances of success by doing so. So banks are in the business of risk management, and you cannot manage risk unless you have information. And so the lack of information that is presented may not be sufficient enough for the bank to make a decision. And I used to call them credit choke points. The information may be outdated, or the financial information is inaccurate. Accountants may not have prepared the information. The experience level and training of a banker in some cases may not be there. The borrower may not be specific enough in a credit request. There may be some cultural changes in a bank. A merger may occur. And then you have to be cognizant of the bank credit procedures that we'll talk about in a few minutes. So these credit choke points in some cases may also extend the lending process. I used to call it volleyball banking, because you're going back and forth and not really getting a decision. So let's look at some situations in terms of what actually happens when it comes to securing money and the various ways that banks might approve loans. So there are primarily three ways. One's automated. You can go online, complete a bank's loan application. You can get a response within 24 to 48 hours. The dollar amounts may range from as little as $20,000 all the way up to $250,000 in some cases, but it's not a cumbersome process to get an automated decision. In some instances, it's centralized to the extent that all information goes to a credit underwriting center. They have their standards. They make adjustments based on the information that's presented, and you get a decision made. Centralized review is not necessarily on site at the bank, but perhaps in another location, or in some cases, even in another state. Third instance, judgmental review. This means that someone's going to take a real good look at your information, depending on the dollar amount, and they're going to go through your financials. An analyst may do so, and an experienced banker may do so, and they're really going to scrutinize the amount. Again, that's driven by the credit culture of the bank and the dollar amount that's being reviewed. So automated, centralized, and judgmental review are the types. And again, this just tells you what type of information might be needed in those particular circumstances. So I hope this helps you understand some of those decisions. You should try to get to know how your bank underwrites credit as well. They may have a credit committee, or they may have multiple signatures required for an approval, but you don't know that unless you ask, and that's why we're having this conversation. So in the event your loan is approved, you may receive a proposal letter, which is not a commitment to lend. It just tells you the conditions under which the bank will lend, and they'll usually ask for more information to make sure that things work out depending on the nature of their borrowing. And again, as I indicated before, banks decline loans for a variety of reasons. So I hope this helps you in your quest for capital, and we'll talk about other elements of this process, and I hope you have a great day. Goodbye.